So a few days ago, I released this video explaining to everybody the ETF JEPQ and my thoughts on it, because I was actually debating on whether to invest into it or not. And I actually did end up investing into it a little after I released that video. And well, it has one of the biggest yields, and that was the main reason as to why I did. Now, in that video, I did go on to say as to like how this yield actually gets paid out, how this dividend actually gets paid out is mainly through selling calls and that stuff, and the overall aspects of the ETF, and that they are trying to keep up with market capitalization, not just pay a high dividend yield, but also try to have capital growth as well. Now, with this, I actually did receive this comment. Shout out to you, by the way. I don't know if you said sarcastically or not, but it ended up giving me this idea for this video. And well, this commenter basically said, now compare that to the S&P 500. So that's exactly what we're going to do today. We're going to compare JEPQ to the S&P 500, the NASDAQ, and the Dow, going back as far as we can. And we're actually going to do something a little bit interesting, because one graph shows one thing, however, another graph shows something completely different based on a certain criteria that just changes everything a whole lot. So before we get started, make sure to like, subscribe, comment. Really does help with the algorithm here on YouTube as well as Rumble. Make sure to follow us on X at Fatal Investing. If you like, join us on Discord, which is the best place to catch videos, live streams, and the shorts. The link to this in the description below. So with that said, let's get started with this video. So let's just do a quick overview of JEPQ for all of those who did not watch that video that I just put out. This is by Morgan Stanley. It's an equity premium ETF. And if we come all the way down here, we can get the general fund profile. JP Morgan Exchange Traded Fund Trust, JP Morgan NASDAQ Equity Premium Income ETF is an exchange traded fund launched and managed by JP Morgan Investment Management Inc. The fund invests in public equity markets. It invests directly and through derivatives in stocks of companies operating across diversified sectors. The fund uses derivatives such as options to create its portfolio. It invests through growth and value stocks of companies across diversified market capitalization. And if we take a look at the top 10 holdings, we could see Apple, Nvidia, Microsoft, Amazon, Alphabet Class C, Broadcom, Meta, Netflix, Tesla, and Costco. And well, we can see that there is a total of 109 holdings in this ETF. And of course, the main thing when it comes to this ETF, it is the whopping yield of 9.63%. Now, this dividend, of course, is not qualified because it does come through options. However, I know some people are like, well, who cares if it's qualified or not? Who cares about taxes when you're getting at almost a 10% yield? That's a separate thing, right? I mean, we could get into that. I've kind of softened around the whole concept of a non-qualified dividends. I used to be very against them, but now I'm actually softening more about them, because looking at it more, it actually doesn't make sense as to why some people are so against it, but that's a topic for another video. Nonetheless, though, this is the dividend yield currently, as if I'm recording this on February 13th at around 11 p.m. Yield is 9.63%. And of course, the last thing that we have to take a look at is the expense ratio, because this is actively managed. The expense ratio is a little bit higher than the normal, although the median of all ETFs, it is still lower than that, being around 0.49, and the expense ratio being around 0.35, still has a B ranking grade when it comes to seeking alpha. But now let us compare this ETF to the granddaddy of them all, this gold standard SPY. Now, I am going to be using SPY. I'm not going to be using VOO. I'm going to be using SPY. It doesn't really matter though. It's the exact same thing. It tracks the S&P 500. So let's take a look at roughly the same kind of things. When it comes to the holdings, well, you guys know that this is the S&P 500. It is the Fortune 500 companies. And you're going to see a lot of similarities when it comes to the top 10 holdings. Apple, Nvidia, Microsoft, Amazon, Meta Platforms, Broadcom, Alphabet Class A, Alphabet Class B, Tesla, and Berkshire Hathaway. Now, there's still, 504 companies because of, Class A and Class Bs of certain companies here and there. Nonetheless, though, the top 10 holdings are very, very similar to that of JEPQ. Now, the one thing that's very, very different, it is, of course, that dividend yield, because it is the S&P 500. It is worth upwards of like $600 right now. Guys, yeah, 1.17%. That is a really small yield, but you don't buy into the S&P 500 for a dividend. You buy into the S&P 500 to match, of course, the US economy, right? So it's strictly for capital purposes. It is not for income purposes. So just fully understand that yes, while the yield is small, the capital growth on this thing, it is absolutely bonkers. In fact, we're going to take a look at that in just one second. And lastly, taking a look at the expense ratio, this is a mere 0.09%. Not 0.9%, no, 0.09%, which is really, really small. And the reason for this is because this is not actively managed. This is passively managed, meaning it costs less to own the ETF. So now let us get to the main part of the video, and that is, of course, seeing how the S&P 500 fared with that of JEPQ. Now, there is a way to do this in Seeking Alpha. In fact, if we come all the way over here to charting, I think this only works though if you have premium. If you come all the way here to charting, we can actually compare different ETFs and even stocks to other things. And well, the first thing I want to show everybody is, of course, the S&P 500. On the 1 year, it is up 23.41%. However, if we put this thing to the max, well, you know, this thing, it starts from, you know, what is this, 1995? Yeah, basically 1995, almost to the date also. Wow, that's kind of crazy. 1995 all the way up to today. And you guys can see that it is up a whopping 1,138.7%. That is massive, right? That is massive amount of capitalization right there. So let us now take a look at this in comparison to the ETF JPQ. So if I add the ticker JEPQ over here, we can see that there is some really interesting things happening. For starters, well, if we take a look at the graph, JEPQ only started, guys, as of 2022. So we don't have a lot of data when it comes to JEPQ, and just by the sheer comparison of the S&P 500 to JEPQ, it's nothing, right? It really is. It's almost like it's a straight line, but that's because of the comparison issue. However, if we take a look at this just on the 5-year, which would imply that JEPQ is a little bit more, I guess, noticeable in the chart, we can see that it is still lagging the overall ETF. However, on the 5-year mark, JEPQ, it is up 13.73%, while the S&P is up 79.01%. If we take a look at this in the 1 year, JEPQ is up 11.49, while S&P, it is up 23.41. And looking at this on the year to date, they're almost exactly the same. There's a lot of companies on the S&P that JEPQ also has, so it's not surprising that it is slightly lagging. So yes, from a sole capital appreciation perspective, the S&P 500 is clearly king. However, JEPQ is not a capital appreciation type of fund. It is more leaning towards income. So now the thing here is, what would happen if these dividends, because you're getting these dividends monthly when it comes to JEPQ, what happens if you were to reinvest them? Because these graphs right here do not represent a reinvested dividend at all. So if we come over here to this website called Portfolio Visualizers, a really cool website, allows you to do something similar. And it allows you to set up different portfolios so that way you can compare them both. For this scenario, though, I'm just going to have 2 portfolios, one with 100% SPY and one with 100% JEPQ. But now if we take a look at the settings, we can actually change some stuff. This is going from 1985 to 2025. Because JEPQ's inception is in like 2022, it's going to start at 2022. So we're not going to get the full picture, but we're going to get enough of a picture to understand what's currently happening from the same time frame. All right, so it's going to go from 1985, or whenever JEPQ was initiated, to 2025, which is today. We're going to start off with an initial amount for both of $10,000, and we're going to say that we're going to contribute a fixed amount of $1,000, and we're going to do this every single month. Okay, so $1,000 every single month into both. Okay, then we're going to also adjust for inflation as well. We're going to say no rebalancing in the portfolio, no leverage type, reinvest dividends. That's a big one. And the answer to that would be yes, we want to reinvest those dividends. And we also want to see the income shown after, these 3 years from 2022 to 2025. And if we use these types of metrics over here, we could see that if we come all the way down here, we can see a really interesting chart, because this is very different than that of what we just saw with Seeking Alpha. And well, look at this, guys. The hard blue line over here and the light blue line, it's basically the S&P 500 ETF trust as a base, and then SPY as the ETF. It's 1-to-1, not really an issue with that one. But the green one is JEPQ. Again, this is going from when JEPQ was initiated. Look at this, guys. Starting with initial balance of both SPY and JEPQ of $10,000, we could see that SPY was a little bit up starting January 31st, the first month into 2023. 11,637 for SPY and 11,633 for JEPQ. We go in another month, February. SPY is now actually number 2 already. JEPQ has already taken ahead of the SPY ETF, 12,559 for JEPQ and 12,358 for the S&P 500. And if we just continue this trend, we can see that it is actually starting to separate. Now at this point, by actually, let's do the beginning of 2024, or at least January 31st, 2024, we can see that JEPQ's overall capitalization is 29,392, while the S&P 500, it is 27,808. And if we go all the way up to today, we can see that there was a point here where it did flip, right? At around August 31st of 2024, the S&P 500 did gain a little bit on JEPQ. However, afterwards, it's actually going back to reinverting that JEPQ is higher than that of the S&P 500. And as of January 31st, 2025, this actually shows that JEPQ is $50,336 and the S&P 500, it is $49,034. So there's a big difference here in the sense that, yes, capitalization for the S&P 500 in with no dividends reinvested shows that, yeah, it's just no clear match. However, with dividends reinvested since the inception of JEPQ, it actually shows that JEPQ is ahead of the S&P 500. And that's because you are reinvesting those dividends. And in fact, if we take a look at the annual returns for 2023, JEPQ actually beats the S&P 500 at around 36.23%, while the S&P 500 it is 26.2%. And for 2024, they're basically the same. They're only off by 0.01%. And so far for 2025, SPY is ahead 2.69 and JEPQ being 1.93%, as you guys can see right there. But another thing that I'm fairly certain all of you guys would want to see, it is of course the portfolio income, because again, the only reason why you would buy JEPQ to begin with instead of the S&P 500 is because of that massive dividend yield, and massive it is. Because doing this in 2023, well, the portfolio income in 2023 with JEPQ would be $2,018, while the S&P 500 it is $284, and when it comes to 2024, this is now $3,890, while the S&P 500 it is $489. Again, this is strictly when it comes to dividends. However, that was just the S&P 500. What about the other two ETFs that make up the US economy, the Dow Jones and the NASDAQ? And if we go back to Seeking Alpha and we compare this once again, we can see that on, I believe that this is the year to date. Yes, it is. We can see that JEPQ is lagging behind all of them, right? On the year to date, JEPQ is lagging behind all of them. The QQQ, the NASDAQ, it is up 4.83%, and the Dow is up 5.11%. If we take a look at this in the 1 year, this is still lagging. Actually, the discrepancy gets even bigger. JEPQ, it is now 11.49, while everybody else is near or above that 20% mark. And if we go to the 5 year, we can see that, yeah, at this point of the game, it is just absolutely bonkers, right? JEPQ just doesn't even match up. However, let's do now this exact same kind of thing, but with dividends reinvested, but also taking into account the NASDAQ, QQQ, obviously the NASDAQ, and the Dow Jones, the DIA ETF. So now coming back over here, I have now added the portfolio 1 being QQQ, portfolio 2 being DIA, portfolio 3 being JEPQ, and the benchmark ticker, because I can only put 3 portfolios, but the benchmark ticker will just be the S&P 500. Now let us actually calculate how this looks like, because this is really, really interesting. Everything else is going to stay the same, $10,000 initial investment, $1,000 per month, all that good stuff. So if we come all the way down here, we come to the portfolio growth section, we can see that this is actually really interesting. So the blue line is QQQ. The green line, it is the Dow Jones. The kind of light blue, it is JEPQ. And the, I don't know what that is, whatever that looks like right there, that is the S&P 500. And if we take a look at this, well, we can see that the clear winner right here, it is, of course, QQQ. Again, this is with dividends reinvested as well. So the NASDAQ is the clear winner, guys. However, as of today, we could see that, well, as at the end of 2024 and the beginning of 2025, we could see that JEPQ is actually number 2. We can see that at the end of 2024, QQQ is $51,732. The second one being JEPQ at $48,332. Number 3 actually ends up being the S&P 500. And number 4, it is, of course, the Dow Jones. The Dow Jones has been lagging all of them since the beginning of this, right? So that's really amazing and proof that once you input dividends into the equation, when it comes to investing, especially reinvesting those dividends, it really is a game changer, right? The NASDAQ, obviously, it's mainly tech companies, and tech companies are wild. But in general, though, JEPQ beats, at least since the inception, right? Since the inception, starting, of course, December 31st, 2022, since the inception of JEPQ with dividends reinvested, seeing that yield is so big, it actually does beat both the S&P 500 and the Dow Jones. And we can see it right here with the annual returns in 2023. The biggest one here was QQQ at 54.85%. Then JEPQ 36.23, then the S&P 500 at 26.19, and the Dow Jones at 16.03. In 2024, this is 25.58 for the QQQ, JEPQ being 24.88, the S&P 500 being 24.89, and the Dow Jones being 14.82%. And when it comes to dividends, it doesn't even come close, right? I mean, you could tell that in 2023, JEPQ did $2,018, the Dow Jones did $329, and the NASDAQ did $154. And in 2024, JEPQ did $3,890, the Dow Jones did $571, and the QQQ did $255. So as it stands, my good man, thank you so much for a comment, because it really did, motivate me to make this video and to show everybody that, yeah, on a capital appreciation alone perspective, it doesn't come close, right? It doesn't come close. But once you add that dividend reinvestment into it, man, does it change things. So let me know what you guys think about that, because a lot of people will see this and maybe they didn't realize that this was a thing, right? So let me know what you guys think. And does this change your mind about JEPQ, or maybe just the way that you look at, buying into the S&P 500 in general, or any other ETF in general, right? So thank you guys so much for watching. Make sure to like, subscribe, comment. Really does help with the algorithm here on YouTube, as well as make sure to follow us on X. I feel investing. Join us on Discord, which is the best place to catch the videos, live streams, and the shorts. The link to us in the description below. So with that said, peace out, and we will see you all next time.